Hey guys, Don Durrett, Gold Stock Data. I created this research result yesterday, and I thought maybe it would be worth sharing, give you guys some more ideas on buying the dip here, buying stocks that are cheap. This is a list of producers that have current free cash flow multiples below 5. So you can see this category. EM is emerging mid-tier, MP is mid-tier producer, SP is junior small producer. So these are all producers, and they're all top picks. So a top pick would be either green or blue. They're all top picks. So they're basically any producer that's a top pick that has a free cash flow multiple under 5. Green is better than blue. Green is top 25. Blue is not quite yet good enough for top 25, but probably you'll get there. But most of these are green. If I scroll to the right, I'll show you the multiple. So this is the current multiple. So if I sort these, we have Step Gold 1.3 is the lowest one. They have free cash flow about 80 million. Actually, I think I should be able to see it. No, it's not there. Well, their market cap is 117, and I think their free cash flow is about 80. Let's go back to the multiples. So we got several of them under 3. Um, and you can actually create this search yourself. All you have to do is just add these names in, and so you can look at the data if you want to. So here's the balance sheets. So if we look, you can go through and see, is there any that have a debt problem? So maybe I'll go down these lists real quickly. I won't spend much time on each name. And then you can do your own research on these companies. So STEP is, they just acquired a gold project in Mongolia called Baru that's going to increase the production in 2025 to 80,000 ounces. And they should be able to hold that 80,000 ounces going forward and then expand upon it. And they have a decent balance sheet. So they have 36 million cash, 72 in debt, and they're going to generate about 80 million free cash flow this year. So they're trading at a 1. I don't have a problem with Mongolia. I think it's a good opportunity. Luca Mining is another one that I like a lot. They're in Mexico. They had some problems in their stock park. Their valuation crashed, and now they haven't really bounced. But you can see they only have 12 million in debt, and they're generating free cash flow. I wish I had that on here. I could scroll to the right and get to it. Um, uh, Here we have their cost, so we can see if there's any that are extremely high. So step 1600, Luca 1700. Anything that means their ASIC is about 1200. Anything that has, so this is about $1,000 margin here, which is really, really, here we have it. The margin's right next to it. So here's our margins. You can see they're all around. So Andean's only 500. Everything else is like 800 or higher. We have Catalyst at 7, Dundee at 1,300, but most of them about $900 margins, which is really good. So these low multiples, it looks like I'm trying to find a silver miner on here. I don't see a single one. There isn't. They're all gold miners. You get Fortuna and Andean. Well, Andean is a silver miner. They're more revenue in silver than in gold. So even though their margins on gold's 500, they have a lot of leverage to silver. So this Andean is really the only one. Now, I don't think I have free cash flow. I have future. Current step gold, 98. I don't have current free cash flow here. Bum, bum, bum. Production. Equivalent. I'm looking for current cash flow and I don't see it. We have yearly. Oh, I'm blind. It's right here. So if we look at the free cash flow on these stocks, you can see they're all pretty healthy, averaging about 100 at current gold prices, about 100 million. Line one and Luca are lagging. Line one has, well, I'm going to go down some of these, but just an overview on the free cash flow at 2,600, you can see a lot of them, like down here, these ones, they have multiples at around 4, 200 million for Ares, 400 million for Ramelius, 400 for West Gold, 350 for Vault, Artemis, 600 million, Fortuna, 330, Dundee, 350. So these companies are generating a lot of cash flow currently, and they're not getting valued for it, and they don't have balance sheet problems. So if they get, any cheaper, I mean, these are kind of stocks that, you could be patient with and maybe get 10% lower from here when the stock market crashes sometime this year. I mean, you could just keep an eye on them. In other words, you say, I don't really, like some people, Jaguar, historically, they've had some issues and people get a bad taste in their mouths and they don't want to go back to it. But you can see it's trading at a 3.5 multiple and 62 million in free cash flow, but they're growing production. If it gets any cheaper, if it drops down, so you could basically have a target price lower. And so these are all companies that have a ton of leverage, so they could double in a hurry. And some of these stocks could, go up 3x value fairly quickly. Um, and that's just on multiple expansion. Like some of these Australian companies like Vault, West Gold, I really think that these guys are going to jump to, tens and 10 or 12 very quickly because the Australian companies tend to get overvalued. It's very unusual for to see these Australian companies. It's interesting, they're all three in a row, Ramelius, West Gold, and Vault. All three of them are right at about a 4 multiple. It's unusual for these Australian companies to be so cheap. Normally they're overvalued and I won't touch them. They're like, I think it's too pricey. I mean, it's not unusual to see a mid-tier in Australia with a 15. We haven't lately, but I've seen it in the past. They just get extremely pricey. So these fours. So, okay, so that's basically an overview. Now I'll kind of go down the list and maybe say a couple things about the ones that I like or don't like. Step Gold, I think the price is right. I think you're paying a 1 multiple for a company that's generating 80 million in free cash flow. it looks really interesting. So basically, there's stocks that I'm just telling you to go take a look at and confirm, the numbers, because the costs are in the GSD. You can go over to the profile page. I can show you that now. So if I click profile for STEP, we can go and we can look and see. You can read this, and we can go and we can look at the cost. So right now I have them basically in ASIC about 1,200. So I have their cash cost at 1,000, and ASIC about 1,200, and break even about 1,600. So you can, go do some research and see if you agree. I haven't even talked about future upside. I'm just talking about multiple expansion alone. But if we're looking at future, I have their production going from 85 to 100, and at $4,000 goal, I have their free cash flow jumping from 88 to 225, and I have them printing as an 18 bagger. So we're not even talking about future upside. All we're talking, but most of these are not most of them. About half of them are fours. These ones at the tops are fours. That means at least a 10 bagger potential. So steps printing as an 18. You're getting it with this, this huge leverage of the multiple. So I'm going to stop right there so you guys can see the cash debt and the multiple. You can also see the cost. So we'll leave it here. Okay, so Luca, yeah, they started a new mine down in Mexico, so they're Mexico focused, and it's similar. It basically has had problems in the past, and it's crashed, and we're seeing 60 million in free cash flow and a 1.6 multiple, and we have cost not too bad. ASIC around 1,300, 1,400 ASIC, $1,000 margins. So it's looking really good. Lion One is another company it's really been beat up. Nobody wants to touch it. People aren't happy with the share dilution. I like the exploration potential. They have a lot of high grade gold that they can find in their property, very large property. It's amazing to me that these first four that are under two are stocks I really like. It's like, why are they so cheap? Now I get it that where sentiment is down and a lot of these companies are kind of oversold. Nobody wants to own them. By the way, we also have the debt ratio here. There's only one that has a 1. So 1 means they have more debt than they have cash. 0.45 means 0.5 means about half. They have twice as much cash as debt. So anything that's above 0.5 is potentially an issue, potentially. Depending on, they could run into trouble if gold prices rise, in other words. So, yeah, line one. So, I just think that line one, it could be a big mine. So I like speculating. And the other thing I like about it is the grade. I think they can find a lot of high grade gold underground. Ore zone is in, I think it's in Cody. I don't think it's in Mali. Oh no, I think it's in Burkina Faso. And nobody wants to touch it because Burkina Faso currently has a junta general in charge of their country, same as Mali. And so Orezone has gotten sold off, but they're generating a lot of cash, $1,000 margins. So basically, looks like about 120,000 ounces, about $1,000 an ounce in margins, 120,000 in free cash flow. So Orezone's generating a bunch of cash. It's a very good property, and they're finding a lot of gold. They They have lots of targets. It's really never been drilled at depth. So these first four I really like a lot. Okay, so Allied is a producer in West Africa. This is one of the, and they're all over Africa. They're not just West Africa. I think they have some in East Africa as well, maybe even some Central. But I like the management team. So they're getting basically, you're getting a lot of risk in Africa, but you're also getting a lot of free cash flow and a really good management team. So, it reminds me a lot of G mining. I mean, these are guys that are just real pros. They can just build mines quickly. They know how to operate them. Kind of like Perseus Mining type company. Very similar to that, but Perseus is, I think their mines are a little bit safer locations, better balance sheets, a lot bigger company. But I think Allied could definitely get there. So they have an EV of about 700 million. It's a larger company. I do, if I don't own the company, I'll tell you. If I don't say I don't, then I do. Let's put it that way. So far every company I've mentioned I own. Talisker, they're in British Columbia. They had a lot of trouble, but now look, no debt, 24 million in cash, and they're generating 15 million in free cash flow, and this is a growth story. Just another unloved stock that I do like. Andean, they bought this project in California. I didn't really like the deal. It's kind of a short mine life, high cost. It's bit them a little bit. Their margins, it's really high cost right now. Their cost should come down, but it isn't a long life mine. Six, 7, 8 years. I don't think it'll go beyond 8. They'll be lucky if they get 8 is my assumption, but it looks like they will get 6. So their thinking was, let's go ahead and just go get some additional free cash flow. I mean, it's sitting, easy money kind of thing. But then the cost kind of bit them and their share price crashed. And now they're trading at a 2 multiple. Yeah, I think it's, I don't have a problem with it here. I think it's actually pretty good. And especially if you can get it cheaper. Like, if we get a sell off, for instance, they definitely, don't have a balance sheet problem with 94 million in cash. Aura Minerals. This is a bigger company, $1 billion EV. This is a stock that if you look at his chart, I mean, it's really done well. I mean, the thing is really taken off, and yet it's still only trading at a 3 multiple. I think it's ripped from like 11 to 16, which is like a 50% move this year. Yet it's still trading, because this thing was trading at like a 1. Now it's trading at a 3. It's a really unloved stock. They mine in South America. Brazil's like their mainstay. They're also in Mexico and in Honduras. But yeah, it's a Latin company, kind of like Fresnillo, and they pay a 6% dividend, which is real interesting. But I don't own Aura, but I have it on my buy list. I buy the dip. So if it drops, and the reason why I'm not going to buy it is, so let's go here, go Aura. So if we do 1 year, you can see this thing was trading, $8. It's up 100%. Well, actually not up 60% for the year, but down here at the bottom, $8, $9 back in January to March, it was at $9. Not quite 100% move, but it went all the way to 18. But if you look at this chart, you're like, do I really want to buy it here? I would much rather buy it at like 12. And I don't know. This is Canadian dollars, but I definitely 14. So I'm thinking 12, my entry is 12 to 14 here. Which, you don't want to buy tops. And so it's been running. And now I'm kind of interested in the stock because I was looking at these companies here. It's basically a top pick that I don't own, and it's trading at a 3 multiple, and it might get a little cheaper. So I might end up owning it if we get a correction, because I have it on my buy list for buy the dip stock. Alkane is in Australia. Alkane is a company that you really only want to own if you like copper, because it has their project is a gold copper project. Um, so I do own it because they do have a lot of gold and it's very cheap. I mean, if we look, enterprise value is 192, but they have a lot of gold and copper, and it's I think it has a lot of leverage. Everything on here is a top pick, so it's at least a five bagger, right? So they all have a lot of leverage. Centerra, I used to not like Centerra because they were mining in Eastern Europe, but they sold all those projects and now they're only in Turkey and Canada. And then I bought it. And it's still a lot of these companies, they get sold off because of where they're at. Like they had these projects in either Russia or somewhere in the Russian satellite countries. Nobody wanted to touch it, and the reputation was always it's a high risk company, and so it's never really come back. And here it is. I think it's a very quality company. I mean, look at the free cash flow, 400 million. That's a lot of free cash flow, and they don't have any debt. I mean, it's a really nice one, and they have really good margins, $1,000 margins. It's trading at a 3 multiple. Basically, as far as I'm concerned, this isn't even trading at half off. It's trading at like 2/3 off. This thing should have a 10 multiple. Um, so yeah, and I I like Jaguar just as much as I like Centerra, trading at a 3 multiple. And the thing about Jaguars, they have two mills that are basically currently running at 50% capacity, and they're finding higher grade gold than the current head grade on deposits on the same property. So they're going to be able to lower their cost and increase production over the next 2 years. So I love these plays where you don't have to pay for increased production. They're basically valued, like enterprise value, 182 million. They're basically valued at current production, actually below current production. And you're not paying any premium at all for the growth. So all you have to do is wait. This is this mismatched um, valuation to share price. I think Centerra and Jaguar are very mispriced. Torex. I don't own Torex because it's a single property. Well, it's actually a two property, but they're currently they're shutting down, well, overlap from one big, huge open pit to another one. But they've always been kind of a single property, and I don't own it. And I don't know why. I just never got really excited. I wasn't excited about the fact that they were going to be transitioning from one large pit to another, because those sometimes that can go south. But their transition has been very smooth. But yet the reason why is a 3 multiple is because people are nervous about that transition, because it's a really large mine that they're transitioning. But so far they've done a really good job. If they had a pipeline, if they had another project that was showing growth, I would probably own it. It may be a mistake that I don't own it, but just the fact that single property mines sometimes, and it's in Mexico as well. I don't always have a problem with single property mines. Um, like a lot of these development plays are single property, like Discovery and Chesapeake. I don't have a problem with that. I think Go Gold is basically, their Los Ricos is basically single property. I don't have a problem with that. I don't know why. I just never got excited about Torex, but I probably should here. I like Aura better than Torex because they have like 5 properties and 2 development plays, and but Torex is undervalued. Pantoro, this is another one that I don't own that's on my buy the dip list. It's in Australia. It only trades in Australia. I sent them an email and asked them if they were considering supporting North American markets, and they said no. They're just sticking with Australia, which is kind of disappointing. Um, but Pantoro is it's it's definitely interesting to me because they have a lot of exploration potential. They already have a lot of gold. They're going to be able to produce 100,000. They're now a 100,000 ounce producer. They're going to remain that. They're probably going to grow. I would think they're probably going to double that. It's another one of those stories that's, it's kind of a growth story that you're not paying a premium for. Um, and a 4 multiple doesn't surprise me for, you know, right now, companies are just not getting high multiples in Australia. A lot of these are not. But I definitely, the 2 companies on my buy the dip are Aura and Pantero. Um, I, it's not an Aussie 8, but it's close. I could see it getting on the Aussie 8 list once one of the other Aussie 8s drops off. They're definitely the next in line. So they're right below the Aussie 8. If you're wondering who are the Aussie 8, you could, I think I have an Aussie 8 thread in the forum, or you could search Twitter for Aussie 8, and it would come out with my name. You can do in Twitter, you can do an advanced search where you just search by me and then a search word. You could find the Aussie 8 that way. The Aussie 8 are like my 8 gold miners, like the Mormons are my 8 silver miners, kind of must own. Eris Mining, they just had some bad news this week regarding Soto Norte. Looks like right, it looks like the government might want to put Soto Norte into an environmental reserve, and so that would be really bad. But I'm valuing Eris without Soto Norte. And so if you just add their current expansion to Marmato and Segovia, those 2 combined plus the mine in Guyana, you get to 500,000 ounces. And so you get a 500,000 ounce producer and they have an EV value of 1 billion, free cash flow of 200 million. I think Eris here to 4 makes a lot of sense. They do have a 1 multiple, which will have more debt than cash. Um, yeah, 1.1. Ramelius, West Golden Vault. I can do all 3 of these together. They're basically all generating about $1,000 in margins, and you're buying them like half off, in my opinion. Those 3 are all on the Aussie 8. Next one's Artemis Gold. I always like I own all these down, all the way down. I own West. Well, I own basically all the ones at the bottom except for Black Cat. Um, okay, so we're at Artemis. So Artemis just came on. No, yeah, they just did first pour. They're in British Columbia. It's a very big mine, and amazingly, they basically built this with only 350 million in debt. I guess that is a lot. I wouldn't say only is probably not the right word, but the payback on this thing is less than 2 years. Well, actually, it's gonna be they're less than 1 year. They're generating 600 million in free cash flow with $1,100 margins. Um, and they're only having a 4 multiple, and I think the reason they had the multiple so low is because investors want to see them ramp up and make sure they don't have any problems. So but I think this thing should definitely go to an 8 multiple. Just once it gets online, they hit their targets, it should get there, and then I think it's probably going to go to a 15 multiple. So you're paying, a third on multiple expansion alone. This thing is basically should go up 200%. Then if gold prices rise, that's when you're going to get your five bagger basically. West African, I've always liked this company. They good management team, reminds me a lot of Perseus. They're growing production, the $1,000 margins. They're aggressive like Perseus. They're always trying to find new projects to grow. The risk is Africa. If you don't mind Africa, I think West African is a very similar story to Perseus, kind of the best of breed mid tiers. Fortuna, they're also in West Africa now. And I think they're a bargain here at a 5 multiple. I think it's probably gonna, I don't know if these, like I said, Artemis is probably gonna get a 15 multiple. I don't know if these African companies are gonna get 15s, but I think they're gonna get 12s. So, you're gonna get at least, it's at half, you're getting it basically at half off from the multiple expansion. But I'm a fan of Fortuna. You're just taking on risk in Africa if you don't mind it. Catalyst Metals, they're mid-tier. Oh, this is another one that could be on the Aussie 8. Um, it's a mid-tier producer in Australia. They're kind of close. And then Black Cat's also in Australia. They're an emerging. They're kind of I don't own Black Cat. It's an emerging mid-tier producer, I believe. And then you have Dundee, who's kind of a best-in-class mid-tier. It's kind of crazy. They're in Eastern Europe. That's the reason why their multiple is only a 5. I think their multiple will go to 15 if they don't have any problems and they generate, they have 13. Right now, their multiple they only cost like an ASIC of about 950. They have $1,300 margins, and they're a very quality company. They're just generating a lot of cash. They have no debt, 650 million in cash. They're going to buy back shares. They're going to grow. So I think, Dundee's one of my favorite mid tiers. They've been a good performer. So this is Catalyst. Yeah, so this is another one that could be close to being an Aussie 8. Pantero and Catalyst are the two mid tiers that I don't have on there. Okay, guys, that's my little. I'll see you guys next time.